All right, here we are. This is the weekend video. It's Friday again, again and again and again. We keep hitting Fridays quicker than you expect. Um, and we're going to go through the markets and have a look at how we got on. Again, it's been another wild week, but we kind of expected that. So let's get into it and see what transpired and what is lining up for next week. Okay, so this is euro dollar again. I'm going to start with the FX. This is euro dollar. And we have what seems to be a three-wave expanded flat pattern completed at last week's high, or when was that? Monday's high. And we have sold off pretty rapidly off that high. So we hit the 115 level. So that was kind of up around the previous kind of A level, or previous high within wave one down. So now we have what seems to be a three-wave pattern complete. Like I said, why are you repeating that? I'm repeating it because. Okay, so the decline off the high seems to be pretty impulsive so far. So let's get in there and see what's happened. I'm fairly certain that we have the top in for wave C and wave two, and now we should be working lower in a third wave. Okay. Here's the hourly chart. It seems to be a series of 1-2s and maybe an extending third wave. I don't particularly like the pattern yet within that third wave, but it's not for me to like it or dislike it. It is what it is, and we are declining again today. So I was looking for a kind of a completion of a third wave down maybe today. So we're still a ways off that. It's 3 o'clock here, so we have another. Yeah, what it's only early morning, mid morning over in the States right now. So um, yeah, there's a way to go. Let's see if the market continues lower down into that below that 110 level again. That would be pretty convincing that we have a third wave three of one completing. And then I'm just looking in general, looking for a 5-wave pattern lower in wave one, and then a 3-wave pattern higher in wave two. We could move this all up by 1 degree as well. That's the kind of, but we just have to work with what we get. There's always that possibility that we could be running at a higher degree here, and it doesn't change the count; it just changes the way you view it. Okay, so for next week, I want to complete a completed bearish impulse wave. Wave one and two down, and then we work towards the third wave down again eventually, maybe the following week. Okay, so pound dollar cable. Here we are. We didn't quite reach that 132.80 level we were looking for. That was the previous wave A, and I actually moved that wave count up by 1 degree this week. So let's get that sorted here. And it seems now we're moving impulsively down. We got the rally we were looking for. It seems to be a running flat correction wave two, and now we got the decline that we're looking for. So that seems to be a decline into a third wave, and that would be wave three in green. Well, let's get that sorted. Why don't I have this done? Beats me. That's just the way it is. Okay. So next week, again, probably a bearish impulse wave to begin a third wave down. Let's see how that's working out. Well, no, uh, it's a pretty rapid move, so it's not all wave one. It seems to be you probably have 5 waves down into wave one, small 3-wave move in wave two, and now we're working lower in wave three. I was looking for a 4th and 5th wave today, and with a potential target at about 123.70. The reason for that being that level is about the 162% extension of wave one. So you see here this wave one into that low there, 128 low. That wave one extended from the wave two high gives us 123.72 at the 162.8 or 161.8% Fibonacci extension. So that's a reasonable target. It looks like wave five should develop in 5 waves. We've kind of punched to a new low just about an hour ago. So we'll see, does this develop further into a 5-wave pattern. If we get some sort of support around that 124, 123.50 level, yeah, then we'd look for some sort of correction up into a 4th wave, and then a run lower into wave 5 of 1. This can develop, obviously. We could go, sorry, wave 5 of 3. Yeah, it looks like we should actually extend a lot further than that, but it'll depend on how, on what sort of a corrective reaction we get to this, the new lows occurring today. I may reorganize this wave count later on today. We could put wave 1 down into these lows, depending on how you count this initial decline off the high, which is quite interesting now that I think about it, but I'll keep that in mind for later. I should clarify that in my mind before tonight's update. Okay. Yeah, so next week, probably some sort of a corrective lower high. Maybe it's a second wave, maybe it's a 4th wave, and then continuation lower in wave 3 green. Okay, so dollar yen. It looked like that triangle kind of blown out of the water last week, but we have a rally back into a larger triangle this week. So we have the recent low taking out that previous low. So that was the kind of trigger point there, that 104.40 level. And once we broke that, this, go to the daily count, this large triangle here just extended basically. And now we're looking at a closing wave C and D and E again. So more ranging action. Yeah, it's pretty annoying to be honest, but that's just the way it is. We have 3 waves up, it seems, so that could be wave A of D now complete. It depends on how the action goes next week. Some sort of a sideways or 3-wave correction sideways. I would expect kind of, how would you say, the overall wave D pattern. It could be 335 flat correction. We'll just have to see how that runs. This is what I'm working with on the hourly chart. We've got an A, B, and we have 5 waves up into that kind of shoulder of resistance there around that 107.80 level. What did we pop to this morning? We hit 107.50, so we're there or thereabouts to complete a possible A wave. I mean, you could, if this extends higher and we start hitting, that previous 112.20 level again in a 5-wave pattern, we could rearrange this to be A, B, and then rally up in wave C, but I just have to see how it goes. Corrections can take so many different forms. It's really, it's definitely an art. Anyway, not a science. Okay, so next week we're going to be stuck within this range for a while. Within wave D, that 112 to 101. Well, it's a large range when you think about it, but it is what it is. We're just going to have to work on wave B, and then maybe we'll get a 5-wave rally in wave C. We'll see how that goes. Okay, so woo, that's the stock market. If you can pick it out, there's 2 bars on the 4-hour chart. Okay, here we are. We've hit the wave 3 target, basically. That's what I was looking for, a push down towards that 21,000 level in wave 3 this week, and we've done it. So it looks like we're probably going to correct in wave 4 over the next few days, depending on how it goes. I mean, it could be a rapid 4th wave as well. That wave 2 was pretty rapid, and it was only a couple of days, 3 or 4 days, just bouncing around the place. And then we shot lower again this week into wave 3. So yeah, we've taken out the December 18 lows. That was always kind of the major trigger point for a bear market that I was looking for. But it seems we only have 3 waves done so far. We have wave 4 and 5 yet to do. And this kind of downward sloping trend line seems to be pointing down towards below 20,000 for wave 1. So if we're conservative enough, if we broke wave 3 again, which was about 2,400, if we broke below 20,000, then we'll probably start looking for a bear market bounce in wave 2. We'll show that there. Wave 2 probably up around the 23,000 level again, and that of course will lure a whole lot of people to their death. That wave 2 rally will be, that's the large scale dead cat bounce that will form the bearish impulse down into a third wave, and third wave will be where all the bankruptcies and stuff will begin to happen. Okay, so a 4-hour chart, there's nothing we could really show on a 4-hour chart. It's so damn, it's empty space basically. We had that 21,460 level. That's the support of previous fourth wave back in December 18. What did we hit this morning in the futures? We hit about 20,000, 2,400, and we're bouncing off that level. So it depends. I mean, the market kind of, it spiked up, spiked down on the open. It looks like we could be tracing out some sort of a correction in wave 3. Let's get into the hourly chart to see what we were expecting last night. Well, wave 4 we were expecting to begin, so it looks like we've got maybe an A and a B underway, with a C to follow. Depending on how the action plays out for the rest of the day, we had a cluster of targets down at, let me get up there. A cluster of targets for wave 3 down at the 19,200 level. So that was where, if I go to the 4-hour chart, I might see it better. That would be where wave 1, I may as well show it. Why am I talking about it when I can show it? If you take the Fibonacci grid here, you take wave 1, the 100%, and you extend it from the high of wave 2, you get about 19,200. So that would be where you would expect wave 3 to target. And if you go in here, if you get the 100% extension of wave 1 in green, that's wave 1 of 3, and you extend it from the second wave high here, that gives you a low of about 150 to complete wave 3. So that's wave 3 of 3 rather than a larger wave 3 in blue. So you would still, if you're following me, you could still expect to see, let's get a fourth wave, wave 4 and wave 5 lower again, and that would complete wave 3. Yeah, there we go. So that would be wave 3, and well, like I said, it looks like we have a nice cluster of targets down there about that 19,000 level. So it would be reasonable to suggest that wave 3 in blue, if we go to the 4-hour chart, wave 3 in blue will complete down around that 19,000 level, and then we'd look for a bounce in wave 4, and then another decline in wave 5. It's going to be a series of fourth, fifth, fourth, fifth, fourth, fifth waves. It looks like, to complete this initial move down in to begin the bear market. So off that level, once we have the large degree wave 1 complete, then we'd look for a large degree rally in wave 2. So probably up, we could reach back up towards the 24,000 level in that wave 2, depending on how it goes. We'll see. Okay, so next week, we want to complete at least a wave 4 here. Maybe we'll even complete that today on Friday, and then we'll move down into a fifth wave. So early next week could be a spike lower into a fifth wave, and then a correction in a larger degree fourth wave, and then another spike lower into a fifth wave. So it's the outlook for the next week or so will be a series of fourth and fifth waves, I think. And we'll work from that point on. But so far, so good. I mean, I was the Uber bear, and everybody thought I was an idiot, and here we are. We just undid what, 3 years of rally in the space of a month, 2 weeks. I can't say that I'm not smiling. Okay, let's move on. Now, gold has really kind of flummoxed me today, and I'm going to start on the daily chart. The action over the last couple of weeks has been a pretty clear three-wave pattern. I thought that we had, well, the initial move down in 3 waves down to a down to the lows that we're actually sitting at right now, may have been wave 4 in red, with the caveat that we could have a larger fourth wave to complete. But it looks like an expanded flat wave 4, and it still looks to me like we could have a pretty serious rally ahead up towards the 2000 level in gold. That's the wave 4 and 5 scenario. If this is a larger 1 2 1 2 1 2 pattern, then we could go much higher for much longer. And how would that work out? Well, a series of 1 2 1 2 1 2 1 2 3, that could push us up to 2600. In a third, this large degree third wave pushes up to about 2600, and we could, as this wave C, this larger wave C, traces out, that's probably a year out ahead of us or more at this point. You could easily be talking 3,000, 3,500 gold. So I'm not overly taken aback by this week's declines. I still think it's pretty corrective. It's an ABC pattern, and we still have a pretty reasonable rising trend line here. So for the moment, I'm calling this a wave 3-4 with an expectation for a fifth wave rally. You can see here that we have the hourly chart, 3 waves down in A. If this is a flat correction, this has to be 3 waves up here in B. So I'm counting this as a B, C wave. Excuse the screaming down below. An A, B, C B wave rally, and then some sort of a 5-wave decline down into wave C. Maybe we've bottomed out already in wave C. I don't know. It's a pretty close call here this afternoon. We have a previous 4th wave offering support in a triangle here. We have the previous A wave offering support, and the lower end of the 4th wave there, it's down 1535. That offers support as well. I'm tentatively looking higher next week. I'm looking for a bullish signal. This didn't work out to be what I thought it was, but I still think we're on a 4th wave, and I still think we're looking higher in wave 1 of 5. So let's see how that works out early next week. Okay, crude oil spilling down into a 3rd wave. Always expected this 3rd wave to come along, but just like the stock market, it has surprised me so far how vigorous it's been. Yeah, it's been a brutal sell-off. If I were the king of Saudi Arabia, I'd be pretty worried right now. Maybe that's the main reason why he's purging his family. Get rid of all those payrolls, those expensive payrolls that he's got going on. So it looks like a wave 1, 2, 1, 2, 3, and we'd probably start seeing some 4th and 5th waves coming our way soon enough. So this is the 3rd wave. I mean, we've got a nice, extension gap lower within a third of a third, so it's fitting the bill. On the hourly chart, let's see where we're kind of sitting at the moment. I'm looking at either there was 2 kind of potential scenarios last night. We still haven't clarified which one is going to kind of take the biscuit here. We could have a larger ABC pattern working in wave 4. That'd be wave 4 of 3 or we could already be complete in wave 4, and we are now working on wave. I don't get a alternate count there. We could be working on wave 5 of 3 already. Now, I suppose the main kind of waypoint that we'd be looking at is that wave 3 low. So that 2758 level again. If we break that 2750 level, then we're probably working in wave 5 of 3. And if that is wave 5 of 3, then a series of steps lower will be expected in wave. You got a wave 4 in green here, and then another fifth wave in green. So, we're looking at wave 1, or wave 1, 2, 3, 4, and 5 in wave 3. We have a target for wave 3 down at that target has been hit and broken right now, so extending that target, I'll just have to, I'm not going to edit this out, so I'll just have to talk over what I was talking. We've broken the target for wave 3 in blue here, but we have a target, for wave 3 in green, so that would be, get back on track here. If I take the 100% extension, that gives us about the lows that we're sitting at right now, but it gives us $11. Would you like to see $11 oil? That's the 162% extension of wave 1. I mean, this could be a 3-wave pattern. This could be A, B, and C. But man, if we break below $10 oil, the oil market, the oil business is going to be, well, it'll probably be back to, the good old 90s again in the early 2000s. So that was back when we had $10 oil last time. So looks like we're heading that way again. We had a low this week back into the 20 handle, so 27 handle. We're looking pretty grim in the oil market. Let's put it that way. And if this is a third wave down, a third of a third, that fits the idea that we've got a gap lower. That gap lower on Monday pushed down into a third of a third. So I think we've got more downside, but we've probably got a corrective lower high to work out in wave 4 before we fall down in wave 5 again. It's just going to be, take it step by step and see how the short-term pattern marries up with the long-term pattern. For the moment, it's not looking bright. A series of 4th and 5th waves should bring us lower again down towards that 20 handle. Okay, let's get into the S&P. The S&P is more or less the same as the Dow. We've got a third wave going on. If we project this wave 1 here off the wave 2 high, it gives us a target for wave 3 in blue down at 2250. That 2250 low is down below the December 18 low, so we haven't actually hit that December 18 low yet, and I think that'll be a reasonable initial target for wave 3. And I think wave 1 should break below that pretty easily. Okay, so we have that 2310 kind of screaming at us there, that previous 4th wave. I think we've still only got 1, 2, 3 of 1 now completing, so we still have wave 4 and 5 of 1 to go. So the 4-hour chart, we've got 1, 2. You can see wave 3 here is still on the go. So within wave 3, we've got a third of wave 3 still on. Well, a third of a third of a third now complete, and we're working on the third of a third. If you can follow me, it's getting confusing. I'll give you that, absolutely. We had a nice spike higher. I'd say that was probably a limit up this morning, and now we're getting a sell-off again as the market actually closed. So it could be an A-B pattern as part of an ABC wave 4, and depending on if we break to new lows tonight, we may even have wave 4 done. So we are building resistance, guys and gals. Every day we spike to lower highs and we create lower highs. We're building resistance within the market. I still don't think we're just like the Dow. We're going to see that kind of bear market rally over the next month or so in wave two. First, we have to complete 5 waves down first. The initial target being 2310, but I think we'll probably push down towards the 2100 level before we complete wave one down. And then we'll push back up to about the 2500 level in wave two. And, that'll probably be a peak optimism again before we fall down into wave three. And like I said before, wave three is where the economic damage will be done. Yeah, we're getting financial damage right now, but the economic damage is coming. And that's going to be pretty brutal, I think. Hold your cash. Hold your cash. Because you can buy your dream house. It's coming. Like a 90%. I'm looking for a 90% discount on my dream house in a couple of years' time. Okay. It looks like more downside in the S&P, and like I said, a series of fourth and fifth waves before we clear out a larger before we clear out this larger wave one pattern. Okay, so let's continue to the downside next week, and we'll just chart it day by day or night by night as the market closes. Okay, here is silver, and just like gold, I am calling this a large second wave decline. It's a deep second wave decline, but I think we've got a third wave rally coming, and I think it'll blow our socks off, to be honest. I don't think we are done here yet, even though this has been pretty severe, but I think this is probably too far too fast, really. We had a nice rally over the last few weeks into that kind of 1860 level again, and we sold off pretty significantly this week. Yeah, just like gold, I think there's a third wave coming. With gold, it'll be probably a fifth wave, but we haven't seen a spike higher today in silver, so there's a little bit of divergence again between gold and silver. And I think these levels will probably prove to be a reasonable buying opportunity in silver. Okay, so we have an interim high here at about 1758, and if we get a break of that again, that will signal that the larger wave 3 up has begun. Let's get into the short-term. Excuse me. Let's get into the short-term chart here. This can be viewed as 3 waves down. For the moment, I'm tracking it as a 5-wave pattern, and it looks like here we've got 5 waves down, pretty much complete now at today's lows. So if this is wave 5 of C of 2, well then next week should lead with a rally early on. If this is if it's a triple combination, we've got 3 waves down, then this is wave C. Excuse me, wave C of 2. And again, that should yield to a 5-wave rally in wave 1 of 3 over the next few days. Okay, so I think I'm done. Yeah, I'm not doing bonds anymore, it seems. Admiral markers won't allow me to do bonds. They won't update my charts properly. Okay, that's the market done. We've got some. We've got more to go, I think, in the stock market. I think we're hitting a turning point in the dollar as well, and I think precious metals will come back pretty strong over the next couple of weeks. All right. Hope you enjoyed that. Hope it was helpful, and I hope to see you on the site next week again. And we'll keep the updates coming and the nightly updates. And thanks so much for being around. I'm kind of losing track of my own thoughts here at the moment. It's the coronavirus. It's doing my head in. All our schools are off, and all the kids, everything's been shut down. All the kids are at home for the next possibly 5 weeks. So, yeah, we've got an interesting few weeks ahead. Any ideas in the comments? Leave it there. All right. Have a great weekend. God bless. Don't do anything stupid. Be good. See you next week. Get onto the website. Become a member. Bye-bye.